But markets are in absolute chaos right now, and it's starting to feel like history is repeating itself. And just on Friday, April 4th alone, the market lost $3.25 trillion in a single day. That's more than the entire crypto market was worth at the time. Like, it was sitting around $2.68 trillion. This is the signal we should not wait for any bullish momentum anytime soon. The massive recovery phase is not on the radar. These levels are not just numbers, they are battle zones for traders. We saw that play out with a long squeeze as the price dropped and cleared out those overlapped positions sitting around 81k. They show us where traders are staking their positions and where the market is likely to react next. Ethereum is still stuck in a long-term bear market. Black Monday 2025 is in 1987 again? Hi crypto sensors, welcome to the channel. I wish I had better news to share, but markets are in absolute chaos right now, and it's starting to feel like history is repeating itself. We just had a market crash like we haven't seen one since 1987 Black Monday. In today's video, we will take a look at the impact of this crash, Bitcoin's current price action and key levels to watch, and what this means for traders and how to navigate this volatility. For the record, on October 19, 1987, the Dow Jones Industrial Average fell 22.6% in a single day, the largest drop in US stock history. And the reciprocal tariffs announced last Wednesday had a similar effect. This week, Wall Street faced its worst crisis since the COVID pandemic on Friday, marking a tough week for the S&P 500 and the worst since the COVID then. The Dow Jones dropped 2,231 points, 5.5%, while the Nasdaq Composite fell 5.8%, sinking over 20% below its December record. Total market losses with $6.6 trillion of the value of the US market, and just on Friday, April 4th alone, the market lost $3.25 trillion in a single day. That's more than the entire crypto market was worth at the time. Like, it was sitting around $2.68 trillion. A sea of red in almost every asset market. And we should expect worse from now on. Now, other countries brace themselves for retaliation, like Canada, China too, and European Union as well. If President Trump makes no statement to reassure investors, Jim Cramer, aka the stock guy, famous Wall Street figure and hedge fund manager, warned that this could be the worst crisis America has ever seen. And Bitcoin in all of this? Let's shift gears and take a closer look. It seems like it has caught up with the fall of the asset markets after all. The price of Bitcoin broke through the key area of 80k support and reached the value of 79k at the time of the video. On the Bitcoin chart, we still have a significant bearish divergence to watch out for. As you can see, the price made higher highs during its recent rally, while the RSI made lower highs, right? That divergence alone is a red flag, and here's why it matters. This is the signal we should not wait for any bullish momentum anytime soon. So, what I think is, the massive recovery phase is not on the radar. To dive deeper, let's zoom out a bit and look at the broader setup. If we look at this 3-day Bitcoin chart right now, the price of Bitcoin is continuing the rejection from this area of resistance sitting in between 86k to 88k. I put it in red. So, especially at that 88k, we still have a lot of resistance to watch out for. And if we were to finally see a breakout above 88k, in that situation, we will likely find more resistance close to 92k and major resistance at 96k. If we take a look at the Bitcoin liquidation heatmap for the past 2 weeks, we can clearly see that a significant number of long positions were wiped out. This happened as Bitcoin hit the liquidity to the downside, sitting close to 81k. These levels are not just numbers, they are battle zones for traders. As I have mentioned in my previous videos, there were 2 major levels of liquidity on the heatmap. One sitting around 81-82k, which has now been tapped, and the other sitting around 88k, which is still acting as a key resistance level. This whole move lines up perfectly with what I've been talking about. Bitcoin naturally gravitates towards spots with a lot of liquidity. And just recently, we saw that play out with a long squeeze as the price dropped and cleared out those overlapped positions sitting around 81k. And these levels really do matter. They show us where traders are staking their positions and where the market is likely to react next. Right now, 88k is still acting as a major resistance zone, and if price tests that again, it could trigger another wave of liquidations. But Bitcoin could definitely still push up toward that 89k liquidity zone, but as we've seen, there's been heavy resistance around 88k. and at a few other levels in the short term, and that's what has been triggering these quick rejections. As usual, Bitcoin tends to gravitate toward high liquidity areas, and this time we saw it play out with a move down that wiped out a lot of long position, classic long squeeze. It led to a small liquidation dump, and that's part of what's been dragging the price short term. So right now, these liquidity pockets and resistance zones are key to watch. They show us where the market might react. Oh, and just a heads up, levels that used to be support, like 80k and 81.5k, I now expect those to flip into short-term resistance. So let's keep an eye on that if you're actively trading. That being said, if you're curious about why the price fell during the weekend, I highlighted Sunday in orange, it is due to the fact that a lot of people in the market are thinking that Monday might possibly be very bearish for the stock market, considering how the US stock market ended last week, or the end of this week, basically, on Thursday and Friday, because obviously just those last 2 trading days in particular were very, very bad for the US. And they were actually some of the worst days, as I mentioned at the beginning of the video. Now, let us go back to TradingView. Just a quick digression here. I have been saying this for a while now, but crypto is still highly correlated to the stock market. So when people saw the stock market crash at the end of the week, a lot of them expected that weakness to carry over into Monday. And what do? They start selling off some of their crypto over the weekend just to manage risks before the market open again. So, and this is just my opinion, but potentially I think this explains in part why we saw this dump just right here. It's written Sunday, but it happened throughout the weekend. To me, that just confirms one thing: crypto is not decoupling from the stock markets. It's not a perfect one-to-one correlation, but generally, when the stock market is bearish, crypto tends to follow. And when equities rally hard, crypto usually joins in, especially on those bigger, more sustained moves. So, when you hear people saying, this is it, decoupling is finally happening, just take that with a grain of salt, because based on what we are seeing right now, that's clearly not the case. Now, while all eyes have been on Bitcoin, we shouldn't ignore what's happening with Ethereum. Let's zoom out and take a look at the bigger picture for ETH, because even though it's had a few short-term bounces here and here, the broader trend tells a different story. Ethereum is simply still within long-term bear markets. It is worth pointing out that we are potentially just about to run into significant support right here, based on the previous significant support in the price of ETH, back during around the start of 2023 and also near the end of 2023. And that's sitting at roughly 1,500, just above this value as major support. So, bottom line, Ethereum is still stuck in a long-term bear market. Sure, we might get some short-lived pumps, but the overall structure remains bearish. That key support level around 1.5k is something to watch closely, and if that breaks, it could open the door for even lower prices. Until we see some real strength and structure shifts on the weekly time frame, let us play it safe. So, to wrap things up, welcome into the 2025 crisis, another historic moment following the 2008 housing market crash and the 2020 COVID crash. And just like those times, we must expect some serious volatility. In my opinion, I wouldn't expect a quick V-shaped recovery this time around. The tariff strategy has just begun and its effects will continue to weigh on markets for the short-term future. At best, we might see small relief rallies after this brutal crash, but I don't see any big-term recovery soon. With US stocks losing $11 trillion since February and Bitcoin breaking below critical support at 80k, the market is signaling caution. Be careful. Ethereum is also telling a similar story. While we have seen a few short-term bounces, ETH remains stuck in a broader bear market. And with key support sitting around 1.5k, it's definitely a level to watch closely. If that cracks, we could be in for another leg down. For active traders, the best strategy right now is patience. Keep cash on hand for dips, use only a small percentage of your portfolio for leveraged trades, and do not break the main rule: the trend is your friend, which is now obviously bearish. Remember, this isn't the time to chase quick gains, but to prepare for opportunities when the market stabilizes. Stay informed, stay cautious, and as always, keep an eye on those key levels like 75k for Bitcoin.